What is going on, everybody? My name is Mike, and welcome to TrendSpider Live. Today we have a very long live stream as we have FOMC minutes. I think we're just released. Let's go take a look over here of what I am seeing. I'm going to go ahead and actually pull up the SPY to I see here. Yep, rates were left unchanged. Of course, that's what everybody was already expecting. So rates remained unchanged, as you can see right here in our little news feed. 3.75% versus the 3.75% estimated is what they indeed came in at. And SPY on that news dumped a little bit. Let's put on our expected move from options indicator here on SPY. See what's going on with the 0 DTE traders. This is the current expected range for the day based on what is it? The at the money straddle. And so what exactly is that? We can go up. Yeah, it's about $4 priced in on SPY, 0.57%. So we'll see how that kind of plays out here. I'm kind of looking at a little bit of news. Apparently, Trump is meeting with Artemis 2 astronauts right now. Yeah, there's the Fed. Some comments are coming out. Someone was in favor of a rate cut that I'm seeing right over there. Let's refresh this news feed as well. See if anything else. Here we go. Here's some stuff. Of course, leaves the rates unchanged, offers no signal for when rates may change, cites high level of uncertainty over Middle East developments. Recent indicators suggest economic activity has been expanding at a solid pace. Job gains remained low on average, and unemployment rate has been little changed. Fed says inflation is elevated versus somewhat elevated, okay, in the previous statement. So citing global energy prices. So that's pretty much the gist of what just happened. Rates remain unchanged. If you guys are out there in the chat, go ahead and say what's up. Yeah, this is Jerome Powell. What's going on SJD News? This is Jerome Powell's last FOMC meeting. Dot from X asked about what about Tesla? What about Tesla? I have no idea. What about it? Didn't they report earnings? I was live for Tesla earnings at some point, I believe. Let me open up my account. Whoops. Tesla earnings already happened, and they gapped lower, as you can see here on my charts. What is going on, Larry? Tesla is going to dump. Why do you say that? I mean, yeah, it seems like it is just about with everything else in the markets right now. Let me open up, my live dashboard. We can see everything going on right here in the top chart. SPY on the left, QQQ on the right. Can refresh some of these scanners. Got a CanSlim scan and a VCP breakout scanner. So lots of stuff popping up on the breakout scan, which means the markets have been relatively bullish for the most part. Tesla is a meme stock. Yeah, I mean, it used to be, definitely. Let's see. And we have a ton of companies reporting earnings today, you guys. We got Meta, Microsoft, Amazon, Google. You see them all down here on these four charts, or at least the four major ones. We also have QCOM, VIAV. So many stocks, you guys. Teladoc, Ford, Carvana, VKTX. All this is coming out after the bell. And in the meantime, we will be watching Jerome Powell give his last speech here in just about 26 minutes. So make sure you guys stay tuned for that. I'm going to go find where the video feed is. I'm going to stream Powell for us. FOMC live event. Let's take a look. It's usually on the Federal Reserve website. I can pull it up. Whoops. Oh, yeah, it's already actually streaming here, it seems like. So I can get this ready to go over here in the meantime. Let me go back and make sure you guys can see everything still. Drag this back, minimize that. Yeah, so 2:30 p.m. Eastern, you can see we have it ready to go now. But let me know what else you guys are watching. I guess some people out there are watching Tesla, it seems. Let me drag this right just above me. Perfect. But let me know what you guys are watching. We can take a look at Tesla, I suppose. But yeah, not a ton is going on with Tesla. For everyone just joining in, rates have remained unchanged. This is how the SPY is looking intraday. Not super hot at the moment. It's trading near the low of day. And let's see what else we got. Tesla, I can pull that up here on this chart. Yeah, Tesla is definitely trending lower at the moment. As you can see, have the Minervini trend template candles indicator on right here. The candle is trading below all the key moving averages, even the 9 and 21 daily EMAs. You know, see the cross down. That's the 50 crossing below the 150 and the 200. So they've essentially just had a death cross. So yeah, I wouldn't be personally looking to get into Tesla. I want to look at VIAV because that one is reporting earnings today. That one looks beautiful. I mean, this one is just trending right up that EMA. I have so many tabs open, you guys. So many tabs open. Let me see what this stuff IMN is looking like. Move this over here for now. I am in VIAV, so this one is reporting today. Let's take a look. Yeah, this one's been great. I mean, look at this. It's been trending up this 921 EMA for quite a while now. Let's see what's up and down. Regeneron reported earnings this morning. They are down quite a bit. That sucks. NTRA, GEV is down. Testing under that 9 EMA. TRGP says somebody out there in the chat. Ooh, that one's looking pretty good. Green momentum candles for me. Fig Newtons. Let's see how this one's doing. Again, this is Fig stock. ATMU hanging in there. We meet again, Mr. Host. How's it going? Hitarth, how are you doing today? By the way, later on in the show, look at Ross. Ross Store's trending up beautifully. Yeah, later on, we're going to have Rock Regan joining us as well. He is the one that actually created these after hours change percent indicators that I always use right down here. Obviously, they're not active at the moment. And he also has some other indicators, I believe, that he recently made that he's going to probably show us later today. He'll be joining for the live earnings session. TSM recently bounced off the 9 EMA, looking good. I know Rocket Lab was tanking today. False breakout there. Hit the stop. Too bad. PAR and Light. Light has been killing it. Looks like, I think Light hasn't reported earnings, but they are up 7% today. PAR and Pump. Some of these energy names. I don't know how I avoided this stop loss, but I did, and it's awesome. VIAV, Pump. Look at Pump, you guys. Pump is absolutely pumping. Looking good. Momentum is great. No rate cut, but no hike would be good news. Yeah, that's exactly what just happened, Hitarth. We got no change to the rates. The rates remain unchanged. No rate cut and no hike was the news already. That's what just happened about 9 minutes ago. LSCC. Yeah, there's still a lot of good names around here, you guys. This one is that CIEN is breaking the 21 EMA. LHX, actually, I think I got rid of this one. That one hasn't been trending very well anymore. VRT, I think, has been good. A lot of stuff coming down. Overall market, though, let's see. SPY is, coming down today. Coming down to the 9 EMA for the SPY. So that is that. Let's pull this back up. Get this over here. But, yeah, let's see what Tesla is doing. Tesla is coming down. Again, it's not looking very good. Have all these indicators on. Let's go and take a look. This drawdown from all-time high indicator is pretty awesome. Recently posted this one to the store. You can see this basically just tracks how much this stock is down from the all-time high. Somebody says, or Hitarth, Powell Godspeed. He made us a lot of money. Yeah, he sure did. Sure did, didn't he? But it's his last FOMC today, and it's going to be starting pretty soon here in about 20 minutes. So whatever questions you guys have until then, please let me know. What indicator should I throw on? You can throw up some scans. We got so much stuff over here. Mentor Q. Yeah, let's just run through some scans, I guess. Go over to my personal, because I just have a lot of stuff over here that I like to use. We can look at Microsoft. Of course, they are reporting earnings. Recently had a 921 EMA cross. I have this position tool drawn. Let's see what I got going here. Yeah, they hit that 618 level pretty nicely. Yeah, if you enter there, that R is pretty good if you set your stop down there, I guess. Let's see. Yeah, let's run some scans. So let's see, first of all, before we run the scans, let's see what sectors are leading. I open my stock market map right over here. Let's see what sectors are moving. Today, we got energy leading the day. XLE is up. So is semiconductor. So energy and semiconductors leading the day. Silver is leading to the downside. Silver has not been having a good time. Unfortunate for the metals. All the money is going into energy stocks. XLE, let's take a look at XLE. Yeah, XLE is looks like really wants to have this cloud flip, this 921 EMA cross pretty soon again. Maybe it will start a new trend. You can see back here, I had this 921 EMA cross right at the beginning of the year. It's honestly a great trade if you wrote it up here and got out right around here. 27% in 3 months or so. That's not bad. But let me know what you guys are trading out there. If anything, while we wait for Mr. Powell to come on, I'll be live here for quite a while, you guys. I'm going to be live until the after hours earnings. So you're going to be stuck with me for quite a while. Semiconductors are down on the day, but still trending up this EMA cross. But since semis are leading, I can run a scan through there, or even XLE, or both. Seems that semiconductors are still just the dominant theme here. So what I like to do is run my break or my momentum scan based on my personal momentum indicators. One is a custom one that I made. Scan through that. See, I'm scanning through semiconductors only. Let's see what we got. MPWR looking good. Testing the 9 EMA right now. Wow, Intel is up 10% today. Absolutely incredible. What is going on with Intel? Let's open Sidekick and find out. Get rid of my system prompt real quick. Look at my open chart of Intel and plot the recent news and summarize it all for me. So Sidekick is going to be looking at my chart, analyzing Intel, plotting the recent news, seeing what the hell is going on, why it's up 10%. We got AAOI up 7%. Looks like that one would have hit my stop already, though. On, looking incredible. Hit a new, potentially all-time high. Oh, shit. Probably should have left this on for Sidekick, but that's all right. Let's just wait for Intel and Sidekick to go ahead and take a look at it. New more. The dump was caused by the rate decision. So the meeting hasn't started yet, but the rate decision came out about 13 minutes ago. Yeah, I didn't unfortunately plot it. Your chart on a daily time frame has been on a powerful uptrend, of course. Obviously, y'all remember their blowout earnings. Tesla partnership, I remember. Google partnership on April 9th. Yeah, so tons of good news coming out. Post earnings pullback, 27 to 29. Isn't today the 20th? Down to 93. After in 52-week highs near 93, the stock has pulled back. I don't know about that one. The stock is damn near at basically at all-time highs. Bernstein's Stacy Raskin flagged Intel and QCOM as living in a bad neighborhood despite the rally. Broader AI spending scare hit semis Tuesday after OpenAI reportedly missed internal revenue targets. Did make a little short video about that here on YouTube and TikTok if you guys want to check that one out. So that's what's going on with Intel. I mean, this thing is just flying. Semiconductors looking incredible. We got Marvell green on the day. These are all the high. Wow. TER though. Wow. TER. Good thing I wasn't in this one because this one gapped down and is currently down 18% after their earnings yesterday. LRCX, I'm actually in. This is Lam Research. You can tell that it makes have an alert set on my trailing stop here since the dots are connected. You should have Lance Brightstein on. I'm actually, I think he said at one point he was down to come on, but I should reach out to him again because that would be awesome. I would love to have Lance on. He is a GOAT for sure. NBIS recently had a false little move to the down, not false, I should say, but it hit my stop personally. And yeah, I got stopped out the other day. You can see my alert fired right there, so I can just delete that for now. And it's back to the upside. So you can just set buy orders on my stop losses and probably make some good money. Just kidding. Well, sometimes. Micron hitting new highs. Let's take a look at SanDisk, which has earnings coming out tomorrow. Yeah, SanDisk, another freaking new all-time high. SanDisk is absolutely incredible. Look at this move. It does not get much better than that, you guys. TSM, KLAC, LRCX, ADI. Let's take a look at this one. ADI looking great. I mean, this thing just hasn't stopped trending whatsoever here on the monthly time frame. STM, again, new highs. Atlassian, let's take a look at that. That's TEAM stock. It looks absolutely horrific. Do they have this earnings the same day as, yeah, tomorrow post-market? Make sure you guys subscribe or follow us on X and tune in for the live stream tomorrow as well for SanDisk. We'll be live for that for sure. And if you guys are still sticking around here and you guys haven't, let me know where you guys are tuning in from, why you're tuning in, what you guys are watching in the markets. And if you haven't, again, make sure you subscribe or follow us on X. Potentially good buy at these rates. Yeah, I mean, if you're a buy the dip kind of trader, Atlassian definitely probably is on your radar. Would say so for sure. Yeah, I mean, Jira, man, Jira tickets. That's all you need to know to go long on a stock. Tune in from Charleston, South Carolina. Welcome, welcome to the stream. Let's see. We got 12 minutes until Mr. Powell comes out. I will be streaming him, as you can see, right up over here. I can drag this somewhere over here. But yeah, for now, let's take a look at the overall markets here in my little live dashboard. Markets have pulled back up ever since that little dip earlier, as you can see right here on my SPY chart at the top left. This is where the rates came in at, what is it, 11 Eastern time, or is that 11? No, 11 Pacific time. And it is now coming back up to 709.68 for the SPY. Same with QQQ. But, you know, we're probably going to get a good amount of movement once Mr. Powell comes out and gives his final, I believe, final FOMC meeting. Welcome, Miss Wesley. Came from Discord, YouTube, and from Canada. Welcome from Canada. Flagstaff, SJD News, you are a legend. Good to see you out there. You guys didn't know SJD News won a giveaway that I ran on one of these live streams. So make sure you guys tune in to these live streams because every once in a while I will be doing some giveaways and you can potentially win like SJD News did. He won, I believe, a free year of access to the platform, which is honestly insane. These are our list of stocks having earnings. Let's see if there's any key news events coming out. Carvana reports. Let's take a look over at Carvana. Why don't we? Because that one has been quite a crazy name. CVNA. Carvana, you guys, absolutely incredible move there from the bottom. I mean, if you just bought anytime in 2022, you are currently up over 10,000%. Nobody saw that one coming. We're on the weekly. Let's go over to the monthly here. Yeah, crazy, crazy stuff. They're putting in somewhat of a base here at their previous 2021 all-time high. Hell yes. Fort Minor won the 600K giveaway for free year of access. Hell yes. I absolutely love it. Already made next year's sub money. Absolutely. Absolutely. Somebody's asking about the unusual options widget. I'm not going to lie to you guys. I'm no expert in unusual options, but I'll take a look at the widget real quick and I'll show you how I would use it. So you can see example here. We'll go over to Microsoft. Or no, let's use Carvana. So you can adjust the expiration date up here. So if you only want to see unusual options that are, close in time, you can drag the expiration lower or higher, and you can sort it from premium. So if you only want to see high premium, you can drag the premium slider to the right. And these are, the sweeps that you can see right here. We got the 450 call for the 19th of March and the 370 put for the 19th of March as well, with very high premiums. You can see 1 million and 2 million. Those are both out of the money. Baz Furion, what is going on? Looks like a top on Carvana, you say. Yeah, I mean, I don't trade this one at all. You can also adjust the strike prices, and you can see the exact trades or unusual options right up here in the widget. You can maximize it using this. And another great thing you can do, let's get some more on there. You can just click this Sidekick button, and you can just go ahead and have Sidekick analyze it for you. So you don't really have to actually understand too much about how they work, because AI can do it for you. By the way, if you guys don't know, Sidekick is TrendSpider's built-in AI that is connected to unusual options data, price data, fundamentals, everything that you need. And let's see what it says on here. So as you can see, here's a breakdown of the notable unusual options activity for Carvana, and it just explains all of this stuff for you. It tells you if they're bullish, bearish, neutral. So you got only one bullish one here. There's July 26th, 330 call with $480,000 in premium bought. Let's see. So the sentiment on Carvana here is mostly bearish. Gives you a bull read and a bear read, but the bottom line, dominant flow today is bearish. Smart money appears to be fading strength, selling calls and buying puts. One genuinely bullish print is that April 330 call that I noted above, which is a few days old and dwarfed by recent bearish volume. So all you have to do, you guys, is click that button and it will explain all of the unusual options flow for you. If you want to sort by specific contracts, we actually have full options data now, you guys. You can just open options data down here. And if you want to sort it by contract, you open the options map. For example, if you only want to see those puts, and you can sort it by strike range. I just go as many strikes as we can see, and you can filter like only weekly, monthly, or quarterly. And you can view which metric you want to see. We'll just leave it at open interest. Again, you can filter here by strike. And so what this is doing is it's highlighting the highest open interest contracts by strike now. So this is how you can see not necessarily unusual options, but all options just using open interest alone or any other metric here in the options map. I can zoom this in for you guys a little bit, but that is how you actually use the options map. And you can sort it by, for example, if you want to see volume today is a really cool one to look at too. You can see by strike which options have the most volume today. I'd actually recommend doing by expiration on this. So the highest volume today option on Carvana is, it looks like this 400 put, at least on the put side, and the 360 put as well. Yeah, so hopefully that is helpful for you guys. And of course, we also have the full options chain right here that you guys can view everything on, which is very cool in itself. So that is how you use all of the options data here on TrendSpider. And again, you can just ask Sidekick to analyze it all for you. Yeah, absolutely. There's so many different ways to access data. What's happening now, like someone said below, you can open what's happening now, and you can see the SPY and QQQ sweeps. Let's just check out that one. You can see here the summary of what it is. DTE at the order, day sale expiration, the strike price, premium paid, the size, put or call, what the price the asset was, when it was bought, and all that good stuff. And you can sort this by any ticker, premium against, premium at any dollar amounts and all that good stuff. Yeah, but take a look at these, what's happening now, widgets down here in this tab, because there's a ton of good stuff that you guys can actually use. Of course, market scanner and strategy tester down there as well. But let's flip over back to my little live dashboard and see what's going on over here. Put this right around there. For now, we got SPY and QQQ coming back to the downside at the moment. Is anybody day trading these markets here? That is a great way, Fort Meyer. I'm glad to see that you're customizing the platform to your liking. Very important for you to get the full use out of TrendSpider. Yeah, yes, Powell is coming on in just 4 minutes, so I'll go ahead and get that streamed for you guys. What I'm going to do actually is remove my screen real quick and re-add it with volume so you guys can actually hear once Powell starts coming live what he is saying. We can both hear it. But again, he is coming on pretty shortly in just about 4 minutes. And we will be watching him live. I'll probably go ahead and pull up the SPY over here. Put this up. Oh, it's alert list. Let's go back to, what was that earnings? I always forget my earnings list name. It is ER429 2026, and remove that. ER4. Here's my earnings list for everything coming today. I'm going to open up maybe 2 charts side by side here just so we can see a couple of different time frames. Maybe the 5-minute and the 1-minute here. Probably don't need the drawdown from all-time high indicator on a 1-minute chart. And we can use something else. Let's take a look at what else we got. Expected move. Now it's put on the expected move indicator. Why not? This is an indicator that I personally vibe coded for these live streams specifically. Schwab, TrendSpider, and a mic. Perfect trade platform. Absolutely love it, SJD News. Yeah, thank you guys for tuning in. I'm glad you guys are all out there listening, because this is a very important FOMC day. I mean, it's Powell's last time on, and we got just 2 minutes until Sir Powell comes out. And I will be analyzing everything that Powell is saying with Sidekick in the meantime here. I'm going to get a prompt ready for us. Let me minimize this while I go ahead and do that. Say Powell is talking during the FOMC meeting. Here is what he is saying. Let me know how it will affect the stock market and how it will affect each sector. And then give me a breakdown, or I'll say give me a summary of everything he said, whether it's hawkish or dovish, and what it means for the markets. So I'm currently setting up a prompt here for Sidekick so we can go ahead and analyze Mr. Powell's commentary. I'll honestly just cover up this side for now. So let's see. What are you guys saying out there? I run through my Sidekick quota quickly. I need to use it a little more conservatively. Yeah, if you want to, yeah, as you can see, I only have 36 messages left in this account. You can run through it pretty quickly, but absolutely just try to reduce the amount of prompts that you send as much as you can, of course, by making more detailed prompts and all of that good stuff. So it essentially comes out with the best output possible. But it is 2:30 p.m. Eastern time. Let me know if you guys can hear that music. Turned it off for now. Here we go. We're waiting for Mr. Powell, so I will see what happens when he comes out, which should be any moment now. Looks like people are sitting around and waiting for him to come out. Cool. Any moment now. The second Powell hits the stage, we should see some sort of reaction here on both the 1 minute and 5 minute charts that I have pulled up. Hopefully some good movement. There he is. There he is. Good afternoon.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
It is question time.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change. So measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags. So you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? You know, we have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because, you know, what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, you know, it's a much closer thing on the committee than it was in March, and you know, that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. You know, well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and I that's where I am. I get it, though. You know, at a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things. And if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world. That had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. I mean, it's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can, touche, what that, yeah, walk down the steps, what that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real. And the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral, or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting, as opposed to the ones with SEPs. Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting, and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message. And it's going to be all over the place, because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented any action on those changes?
So yeah, I'm not going to go into the real small specifics, but what we found very quickly was that making really large changes, for example, to the dot plot or the SEP, we couldn't come up with anything that had really broad support on the committee. And so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s. The effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. Those hikes may continue to happen, and other things are going to start to reflect. Airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it, between 3% and 4%. We're a little north of 3.5%. So that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit. And I don't think there's much of a case for any case really for policy looking, meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those two goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. You know, people are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets. So they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law, but it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it too is, do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet. And it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect for perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about? So
I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient. And Chris Waller is particularly passionate about that. Of course, so are the reserves, so are the presidents. And, it's a question of how do you accomplish it? We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan, CNN. You've made many tough decisions in your time at the Fed. And as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last question.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently, people are still spending. And how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now we don't actually see much slowdown yet, certainly none from this, but you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of the GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
The GOAT has left the stage. And he said, I won't see you next time. Wow, that is kind of crazy that Powell will never be doing an FOMC meeting again. But you guys, the entire time I've been sitting here writing out a detailed prompt of everything Powell has said, and we're going to ask Sidekick what the hell is going on. Because that was a lot, obviously. And so we're going to use Sidekick to figure out exactly everything that he said. Just like that. So as you can see, I have quite a large prompt. I'm sending it into Sidekick, and it is practically everything that Powell just said, including the Q&A and all of that. Let's see how the SPY is holding up. SPY is, it's basically exactly where it opened. So not a big move to either side. But again, guys, we have earnings coming up as the market closes here in about 34 minutes. And at the moment, we are just waiting. We're going to analyze exactly what Sidekick AI has to say about what Mr. Powell just said during his last FOMC meeting. Here we go. First of all, I'm just going to read out the summary and the key takeaways. So if you guys missed that speech, you didn't understand anything that was being said, here is an entire summary of that entire meeting. Powell's message today is we're holding, we're watching, and we're not in a rush to do anything in either direction. He said the subtle signal is that the next move is more likely a hike than previously thought, or at minimum, a formal shift away from easing bias at the June meeting. Key takeaways: no cuts coming, pricing out any near-term Fed put, no hikes yet, but the door is opening to them. Said inflation is misbehaving. The 3.2 to 3.5% PCE is a real problem. And also tariff news said tariff inflation framed as transitory. Love that word. But he's been wrong before on that word. That just took the actual words right out of my mouth. As we all remember, he said that back in 2020, 2021. Said also the economy is resilient. Spending, data centers, labor is stable-ish. Rate-sensitive sectors like utilities and REITs take the clearest hit. Financials and tech could be the relative winners in a higher for longer environment. So yeah, that is pretty much exactly what he said here. And here is a breakdown of each sector based on what he just said. So starting off with tech, mixed, but Powell impact is neutral, slight bullish sentiment here. Data center demand confirmed. Powell literally just said that there's no reason for data center demand to slow. It says higher rates are manageable for cash-rich mega caps. And then financials, upper end of neutral means spread environment remains decent. No rate cut equals NIM stays healthy. Energy is complicated. It completely depends on the Strait of Hormuz and the war and all of that. But he did note that the oil impact on the U.S. from that is smaller than that of Europe and Asia. Healthcare was mostly unaffected by this pressure. Defensive rotation may slow if recession fears ease. What else do we got? I want to go up here. So hawkish or dovish. The verdict, according to Sidekick, was cautiously hawkish with a wait and see wrapper, which is honestly, I feel like just a repeat of every single time. So this is not a pivot Of course, Powell had held the rates at 3.75%, and the tone skews hawkish relative to market hopes. Again, inflation PCE at 3.5%, both still well above a 2% inflation target. Said the short-term inflation outlook was explicitly raised. Also said inflation was kind of misbehaving. So that is, of course, still something that they are keeping an eye on heavily. The number of officials who see a hike as likely as a cut has moved up. So number of officials who see a hike as likely as a cut has moved up. That's interesting. The shift from easing bias could come as early as the next meeting. He said maybe a little bit of restriction is the right place to be, which is basically where we're at now. We're at like, what, 3.75% on the rates at the moment, which is, of course, above, their 2% inflation goal, which is slightly restrictive. And he says that's probably the place to be. So he's framing the tariff inflation again as a one-time transitory supply shock. Sound familiar? Labor is not seen as inflationary. Spending is resilient, but not overheating. And no one is advocating for hikes right now. So they're still, they're saying, potential rate hikes in the future, but no one is actually advocating for hikes at the moment. So let's see what the market is looking like. Again, still hasn't moved a whole lot. I think the market is still waiting to see what's going to go on with all of the earnings that are coming up. Again, we'll flip over to the live dash. And we got some insanely massive companies preparing to report earnings. Those companies are Meta, Amazon, Microsoft, and Google being the top 4 today. Going to be absolutely wild. We're going to see the reaction to all of them in real time right here on your screen. So make sure you guys stick around. If you guys haven't already, make sure you guys subscribe and like, because I am going live again tomorrow for the SanDisk earnings as well. If you look at the sector rotation chart up here, you can see, let me double check to see this is monthly or weekly data. This is weekly data, so it's a little bit more sensitive. And we're seeing semiconductors going from leading to weakening at the moment, which is a bit interesting on weekly data. And energy is slipping back from weakening to leading. So energy is the one leading, and semiconductors flip back out of leading into weakening, at least on a weekly basis. I believe it's the last 5 weeks, so maybe about a month. Let's take a look at SMH on the daily chart. Let's hide that for now. Daily, semiconductors again, still overall leading. I would say it's came down this week or so. We can flick over back here to the sector rotation chart and update this to monthly, so we can get a kind of longer term view here, which might be a little bit more helpful. Let's take a look though. As you can see, energy, which is down here, is completely going insane. It went from improving to leading quite a bit, and now it's all the way down there and weakening. Not looking good for energy. As you can see, it's down over the last 7 days there on my stock market map. And semiconductors on a monthly basis, of course, is still leading. This is probably a little bit more accurate based on longer term data. XLF is hopping into improving, so keep an eye on financials. And in lagging, we got healthcare and consumer staples. So basically, risk on. Those are the more conservative sectors down there that are sort of weakening at the moment. Along with, I think that's industrials too. Let's take a look at the industrials chart, because industrials were doing pretty good. But as you can see here, if you go to the weekly, it's not trending as much anymore. I had this nice little breakout, pulled back down essentially to the breakout level, bounced, and now we're kind of potentially putting in a lower high, which isn't the best or most ideal look. And by the way, we're going to have Rock Regan coming on the stream here pretty soon. In light of that, let's take a look at the bottom catcher. You guys didn't know, the bottom catcher is made by Rock Regan and is a very clean indicator, and I believe there is a scanner for it. So let's see. Forget exactly what it's called, but it should be called bottom catcher something. Yeah, bottom catcher finder. Let's apply the latest update from the author. And it's searching in the S&P 500. So let's take a look at, see if we got any bottom catcher signals before Rock Regan comes on. And this is using, oh, interesting, the monthly. So monthly is going to be very interesting signals. It looks like LYB. Let's see if there's anything in here. STZ. STZ, that's an interesting bottom catcher signal. By the way, if you guys want to check out these indicators from Rock Regan, I will drop a link down below. Let me find his link here. Should just be trendspider.cc/Rock Regan. But look at this one, guys. STZ. This is kind of not the, pretty much the opposite of how I normally trade. He looks for, potential bottoms, reversals off the bottom. You see this one flashed at 156.70, right around the close of this candle, it looks like, as the monthly pushed up. And he changed this to the monthly, so we'll see what happens there. Let's see if there's anything on, like, I don't know, Adobe. Adobe got kind of shot in the dark there. Let's see, is there one on Fig Newtons? Nope, nothing on Figs. MDLZ is a good one. Multiple, bottom catcher signals fired here on MDLZ. Texas Instruments, wow, that was a banger, up 25% from that bottom catcher. You actually sort by the performance of the bottom catcher signals. The top one is, Dow. Wow, caught that one nicely. LYB. How did you add the sector rotations into an external widget? So that's not a widget. It's just on my live dashboard. It's just a chart. And what I did was I edited the chart to be a line chart, and then I just dragged it away. So I just made it a line chart. You open it, you might be able to see. Yeah, I made the line the same color as the background. So what you can do is, like, right click it, and you see the chart type line. You can change the color of that and the background, make them the same color so you don't see the price line. That's how I did it. It's pretty clean. Good question though. Let's see what else we got here. Pepsi. Pepsi was a pretty good one. Looks like it got alerted right around over here at the top of this candle at the close. Fun indicator, SO. SO had one at 97.38. It looks like it's slightly down from that close, but that was a good bottom catcher signal. And again, we're going to have Rock Regan. I should be here in about 8 minutes, I think. Yeah, people have been asking for that as a widget. We have alerted our dev team about it. In general, we have been asking for custom indicator, or just be able to code custom widgets yourself. So that's potentially something in the pipeline here. Let's see, KR 72.36, slightly down from that signal. Let's flip over to the weekly. Change these to the weekly, rescan here, flip over to the weekly and see if we got any weekly bottom catcher signals. Now, ooh, look at that, guys. Now the bottom catcher is firing on now. It fired back over here at 124.34 and then again at 96.66. So the bottom catcher is interested in buying the dip on this now. As you can see, the last signal ended up doing quite well over there. So now, if you're interested in now, check out the bottom catcher. CRM. Another software name that the bottom catcher is firing on. Full disclosure here, it did fire. I mean, it's one does generally pretty good. You know, it fired in 2019 before a nice run, obviously for COVID, to be fair. But then it fired again here in 2025, and it came down since then. But then it fired once again over here. Great indicator to use, maybe just like average down. FIS, Fidelity. Interesting. One fired on Fidelity. Could be good. ZBRA, Zebra Technologies, we got one firing over here as well. So that was the weekly ones. So yeah, great scan. Absolutely great scan to use here. Let me see if we can go back 5 candles and see if we can find anything else. CDNS. Currently down from that signal, which fired at the top of this candle to close, but interesting. I think I might be in that. I can't remember. I'll put on my indicator here. No. I was getting this confused with like CIEN or something. What else do we got? MKC, ARES, GLW. GLW has actually been killing it since the bottom catcher at 136.81. Where is that? 136.81. Right around here it fired, which is, when did that fire? Back in like March, it fired. Very rarely does this line up with one of my indicators since I'm a momentum kind of trader, but it looks like it fired right around the same time, around somewhere here. So that's a cool one, but unfortunately it's coming down close to my stop. I don't think I'm in GLW, but that was definitely one on my radar. HBQ. Yeah, look at this one. Why is it not showing up? I'm on the monthly. Go to the weekly. Bottom catcher fired here on HBQ at 1944, currently up 3.78%. But we'll save this honestly for when the man himself arrives and shows us the indicator. But until then, let's take a look at Microsoft. I wonder if it fired on Microsoft. It did fire here on the daily. Let me hide my indicator. Look at that. Oh my God. Bottom catcher fired on both of these lows here on Microsoft right at this anchored VWAP, which is kind of insane because I think everyone was looking to buy Microsoft right around these support levels. Now, I sure added a little bit of exposure myself. So, wow. Great call on the bottom finder there. So far, we got earnings coming up, though, of course, in just about 20 minutes till the market closes. So who knows if that will all hold up. It's going to be a massive day, you guys. I honestly cannot wait. See if Teladoc. Yeah, Teladoc looks absolutely horrendous. VKTX. I think I traded this one, but no bottom catchers. Meta. Oh my God, look at this Meta one. Meta bottom catcher fired at the 2022 lows, 113.02. That was a banger of a allocation right there. Wow. Google. Last time Google fired was at the COVID lows, 55, up 500% since then. Amazon. Good snag here on Amazon, it looks like, up 41% from the April tariff dip on Amazon, which also reports earnings. VIAV. Yeah, VIAV has been trending too high for that. QCOM. QCOM had some pretty good bottom catcher finds there. I just said I wouldn't wait for him to come on, but here I am just analyzing still with this. Let's see. Let's go back to the live dashboard. Yeah, what are you guys thinking about the earnings coming up? Let me know what you guys are trading. If you guys are in any of these names, Microsoft, Meta, Amazon, QCOM, Chipotle reports today. eBay, VIAV, Cake, which I think is Cheesecake Factory, Teladoc. Hope you're not on Teladoc. Carvana. Let's see if there's one on Carvana. That would be kind of interesting. No, it's sure up from the last bottom catcher signal. But it was also fired. You know, they had some good fires here for sure. Like 92, 48, 36, and 142. Yeah, solid if you're like a long-term investor, just adding exposure at these levels. Definitely not a bad vibe at all. But yeah, if you guys are out there in the chat, let me know what you guys are watching. Give me guys your top plays. Maybe we can analyze them in Sidekick in a bit. But honestly, we're probably just going to be, let's use Sidekick to go ahead and analyze Meta pre-earnings here. Get my prompt configured real quick. 4/29 is the date to do. So let's open up good old Meta. stick it on the weekly, and new chat, send it in. And just like that, we're going to have a complete breakdown of Meta going into earnings. I use that scan and only get HPE, KDS, OGN. Yeah, I did adjust it. I think it starts on the monthly chart. Also, make sure you apply the latest update from the author if you haven't. But I did the monthly and the weekly signals. And then I did it in the S&P 500. And then I also changed it from within the last 3 candles to 5 candles as well. So that's how I adjusted it. But definitely make sure you actually apply the latest update, because it looks like, so for example here, like this one, I don't know whose this is, but you got to click here, apply last updates from author for it to be the most up to date as well. That is a best practice for anything in TrendSpider, whether an indicator or whatever it is. So you always have the latest version if there was updates pushed. As you can see here, it looks like there's a CoreWeave $21 billion deal. I do remember that. Muse Spark AI launch. Broadcom AI chip deal. Broadcom is not reporting today. It's Qualcomm. 10% layoffs plan. That was in this weekly candle. Looks like China blocks the Manus deal here. And EU DSA breach findings. I don't know. Let's see what's going on there. Here's the recent news from Meta. Again, we got a Broadcom multi-year AI chip deal through 2029. Muse Spark AI launch, which is a new LLM replacing Llama, targeting ChatGPT and Gemini directly with a big 3.5 billion user distribution advantage. I actually didn't even know about that. That's interesting. Muse Spark AI. Never really used Llama a whole lot. I don't know. I haven't used this one either, obviously. But let me know if you guys have. Curious. CoreWeave, $21 billion deal. They did announce the 10% layoffs based on an AI-driven efficiency push. Space solar power deal back on the 27th, just a couple of days ago. Data center power sourcing, long-dated news. So that's the recent news here on Meta going into earnings. You got 13 minutes. Oh, there's Rock Regan. How's it going, Rock?
Doing great. Doing great, Mike. How are you? It's good to be here.
Doing good. Doing good.
Big day. Big day today.
Yeah, absolutely. Was just, going through, actually, I just put on your bottom catcher. I've been going through some of those, but let's take a look at the SPY real quick. Looks like there was a bottom catcher here on the 5, but the SPY really hasn't gone anywhere so far. What have you been watching today, Rock?
I mean, today with FOMC, I mean, we aren't going to get much until we got a little movement once Jay Powell started speaking. So, but up until then, we were kind of chopping around a little bit.
Yep, absolutely.
We had some movements. Intel obviously was moving pretty good earlier, and
yeah, Intel is a crazy move. Let's take a look at the daily here. It's just flying, absolutely killing it. Did you see any specific news there for Intel? I was looking into some news, but I think it's just all the previous news, their massive earnings beat, which was driving it. Yeah, I'm not seeing anything specific. So yeah, Intel just killing it. Semiconductors in general, just killing it still. If you go to SMH, basically all time highs. Let's take a look. MU. Yep. Yeah, absolutely flying. Nice daily bottom catcher there on MU. Look at that.
Yeah, we had a great one on there.
Yeah, that was a good one. 2 good ones, 2025 and 2026, essentially the lows. Nice. And STX, let's take a look at that. STX gapped up. They had earnings yesterday. They've kind of sold off since the peak of today, but memory's still very, very hot. SanDisk reports tomorrow, so that one will be pretty fun as well. Let's see. Microsoft, Meta, got Amazon. Oh, Amazon's been killing it. I haven't really looked at Amazon a ton, but Amazon, yeah, it looks like it's at all-time highs. But yeah, Rock, I know. What have you been busy with? I know you've been making.
I've been loving the options data. So obviously new to TrendSpider. It's been in since mid-March, and it's been just a blast. I've been working on some new indicators, and just went to the store yesterday.
Nice.
And I got a couple of really neat ones I'm working on also that looks at flow, dealer gamma.
Nice.
And I've been testing that for the last week, and going back between Sidekick and Claude and ChatGPT and trying to refine it. So the options data is just wild. So what you can do with that and with the charts is just phenomenal, fantastic.
Yeah, I'd love to hear it. I'm super excited to see. You submitted, what was it, the options chain grid?
Yes, I mean that's just put the in TrendSpider you have the options data is at the bottom of the chart, so you've got to kind of push your chart up a little bit to see it.
Right.
And so I actually have an indicator that puts it right on the chart.
Sweet. Yeah, I don't think it's officially pushed yet. If you want, you can share your screen and show us. But it's up to you. No worries there at all.
I'd be happy to. Let me see here. What do I? Let me just. Okay, here we go. Share the screen. Yeah, we'll share that one.
See how the intraday charts. Yeah, let me stick you up there. Nice. If you could maybe zoom in a time or two as well, so you can see a little better.
Let me do that. Let me go back to the chart.
Yeah,
and we'll go. Oh, whoop! Not too much. How about we just increase the browser a little bit?
There, yeah, no, that's perfect. Yeah,
that's better.
Good. Yeah.
All right, let me go back here so I can see what you guys are seeing. Okay, yeah. So I got two of them on here. One of them is the new one. It's in the store, which is the options contract. So it puts the actual contract right on the chart.
Nice.
Got the size actually a little bit big here. I can actually, since I zoomed, I can make that a little smaller. And then I've got the actual chain, the options chain also showing, and that's the one I just submitted, the grid. And it's just, I'm one of those guys, I just kind of like to have everything in front of me on the chart.
Yeah.
And so I'll make space for me, and I'll, pop over, and I'll pop over to an options chain. So this one's really cool because it actually adds the at the money strike automatically on the contract. So we're on Amazon here. If I swap to Google, it's going to put the actually we're in a daily chart, but so it's going to show the at the money strike. Here's the 350 Google contract call. If we wanted to change that to a put, we could go here. We can configure that, and we could say we want to look at puts at the money. It's going to give a red border on puts, or it's going to many configurations. So if we wanted to go to a different strike, we'll go back to call. So if we wanted to go to +1 on the strike, it'll go to +1.
I see.
And then you can, if you were in a position, you can actually add a position here. And let me just throw one here. We'll say 860.
You put the strike price there,
you can put your position price.
Got it.
So it'll show you where you are, and you see it's moving right now. The line's going between green. Green is going up. If it goes flat, it'll go gray. If it starts going down, it'll go red. So the options data has been keeping me busy, and some really fun stuff.
No, that is incredible. I absolutely love that. And I mean, just sticking the options chain right there on your chart is beautiful, honestly. So great, and it looks good. I love the colors.
You can add the Greeks to it also on the bottom, so it'll show the Greeks here on the strike that you're on. So again, we're on Google 350, 250, and we're you can see we're 2 DTE here.
Incredible.
So that's what's been keeping me busy. I have another kind of really fun one that's in kind of working on, and this one is really, really cool. And let me pop that up.
Let's see.
And so this one's showing a little big right now, but this is a dealer flow gamma grid. Again, it's really, really busy only because I'm still testing it.
Right.
But it is showing where the dealers are positioned, and really, really good stuff. So again, as I switch this, I'll go to Microsoft. We'll see where we'll get this one done. We'll put this one off too.
That is sweet. So I see, what do we got on there? We got I see some walls,
Yep.
call 'em put volume, magnet, pin. Sick. Yeah, it looks awesome. I wonder, are you going to plot those levels as horizontal lines on the chart eventually too? Or are you just thinking of keeping it as a graph?
Eventually I will. I'm just trying to get the graph first. I kind of have the kitchen sink on here right now, going through it. I'm just trying to refine it and make it better.
Right.
And you can see I've got 3 strikes on here. It does the next 3 strikes. So for Microsoft, since they have the 3 a week, that they'll pop those up. But if it was something, another ticker that didn't have that, let me just, how about Morgan Stanley?
Yeah.
It'll pop up the next 3 weeklies. You can see 5.1, 5.8, 5.15. And again, it's going to show where the king level is right here, 190 on the this week's, 190 next week. And then you can see on the 15th, it's bumped up here to 200. So something to keep an eye on and to track.
No, for sure.
So that's
No,
just a little bit of stuff in works.
Yeah. Yeah, you seem to be busy. I absolutely love it. Can't wait.
I got a friend of mine, a trader who I've been showing him the stuff. He finally cracked, and he got a subscription today. So
love it. I mean, it's hard to not to at this point. I mean, we got everything here: options, futures, stocks, forex, crypto. I mean, got it all. So you can code in it as well with JavaScript, which is probably a hell of a lot easier than coding stuff in other languages, that are platform specific. So no, I'd love to see the work you do. You do some incredible stuff. And yeah, earnings are just around the corner.
You were talking about. So Micron had a nice one. This is on the daily. Google had a nice one on the daily. Yeah. NVIDIA, I mean, when these large cap, especially the Mag 7s, when they show a signal, they're definitely something to pay attention to. Mentioned Morgan Stanley, so these are all ones. This is the scan I have, S&P 500 for the past 30 days. I can run that anytime. And you see how quick that is, and it'll go through even ServiceNow here. Let's see where that was. Again, this one is still a little bit red, but
that one is interesting.
The move was actually pretty good.
Yeah.
So, part of this is you get the signal, you got to really kind of manage your risk here in terms of how you take it. So even some of these that go red, usually you do get a move, and then you're hopeful it's going to continue. But if it doesn't, you got to kind of manage that risk right in here. This was
for sure.
Axon. So that was just one of my scans. Then I have I keep a bunch of them kind of fired up. Here's IWM on the monthly. Looking back 4 months, pretty cool.
Yeah, I was running. I think even now I had one on the monthly or the weekly. I forget, but it was some pretty good ones.
Yeah. Oh, yeah. So this is actually one of my favorite ones to run here. We're getting actually 2 minutes, I think, to the top. But you can run bottom catcher against the ETFs. So TrendSpider's got all the ETFs, 4,000 ETFs.
Yeah.
Will run the bottom catcher on, and you will see the trends. So immediately, let me just run this, the latest, even though I think it was done. You'll see what caught bottom catchers recently. Again, this is in the last 4 weeks. So you can see MU, Micron. That's a Micron ETF. That's a beautiful signal. That was another Micron one that was a 2X.
Nice.
Soxy, semiconductors. So you're getting a look at the industries that are now catching bottom catchers. There's Meta. that caught a bottom catcher. So you can do this on the ETFs. Again, 4,000 ETFs. So you're seeing like a lot of the tech names in here. Here's EWY, South Korea. That's probably got something to do with some of the memory.
Now it's popping off. Yeah, definitely. Yeah, the memory for sure.
So it definitely gives you a good way to look at the ETFs and see what, from an industry, sector perspective, what's starting to move.
Yep. No, 100%. I'm going to stick my chart up because the market's about to close in just a second. But yeah, all that stuff looks amazing. We are using your after hours change percent indicator. I use this every single time now for all you guys out there on the stream that are here all the time. You see this after hours change percent indicator that I always use was made by Rock Regan himself. So yeah, tons of great stuff that you are putting into the store that we love. But here is the bell, and let's see what's going to happen. I got Meta, Amazon, Microsoft, and Google loaded up. So let's see what happens. We got some news coming out. Qualcomm just had some news. It's like, Qualcomm already reported like at the bell.
Qualcomm.
So they beat on sales and EPS. Let's take a look at what they are doing real quick. We'll replace Google for a second. And they are down. Down minus 3%. Not too bad, but double beat, and they are down. Interesting. Amazon's going kind of insane right now. So is everything. Wow. Meta. Got Amazon tanking. We got Meta tanking, it looks like, or I guess it wants to tank. Wow.
Microsoft stick.
Yeah, Microsoft. Wow. Crazy movements that I don't even think these numbers have come out yet. Maybe they have, but I thought they were supposed to come out 5 minutes after. I'll just take a look at the movements for just the next few minutes while we wait for the moves to actually go ahead and settle in. Let me refresh this over here. Let's check the news feed. Not seeing anything except for QCOM yet. But mostly moves to the downside, unfortunately, that we're seeing. We got QCOM down. Pull up Google again. Google not moving. Something that I actually kind of just made with AI, Rock, is probably see it on here. The expected move from option. It just uses the at the money straddle for the closest expiration and plots the expected high and low. It's kind of fun to see, for these earnings, the expected move based on option pricing. So essentially, if you're in, I don't know why it's not working on Amazon right now, but wow, that's a big one for Google. Basically, if you're in and you're trading options for these and you're buying options, you want it to go higher than the expected move or lower so you can make money whether you're in a call or put. And if you're selling options, you want it to stick in between that expected move. So just keep that in mind. Yeah, movements, people are talking about like the price movement. Yeah, it's hard to trust here just after the bell with earnings. You never know what's going to happen. That's true. It's like trading.
Usually the first move is not always the right move.
Right. Absolutely. Let's see. Again, anything? We got TTMI. Looks like TTMI had a double beat for anyone following TTMI.
I think Microsoft's out.
Is it?
And Meta.
It's 3 minutes after the bell. Let me go over here to my main chart, pull up Microsoft and see what we got. Extended hours. Might be out, but I don't see it in the news feed yet. It probably is. But yeah, it's up pretty good. You get the after hours change up about 3.5%. Flick back over here. Meta. So, okay, let's start here. So Meta came out. Meta beats EPS by quite a bit and sales beat. So a double beat on Meta. And so Meta sees higher than, or about on par forward guidance. It looks like Google beat. Wow. Oh my God. Google came in at 5.11 EPS, beating 2.62. It's like a 100% beat. And sales beat by $3 billion as well. That is absolutely insane. Not getting the craziest of movements. Let me refresh this real quick.
I think a lot of these they're going to want to hear on the guidance on the calls.
Yeah,
a lot of CapEx concerns about all the spend on data center and CapEx. So that'll probably come out on calls. Yep.
We see something here for CapEx for Meta. Anticipates 2026 CapEx, including principal payments on finance leases, to be in the range of 125 to 145 billion, which was increased from 115 to 135. That's probably why Meta is down a little bit in this after hours session right now. Let me pull back up over here to Meta. Yeah, Meta is not looking super hot at the moment. 6.30 and 4 cents, down a few percent. For whatever reason, it looks like my charts are freezing here. Let me reopen my live dash. While we do that, let's see. But yeah, Meta, like I just said, increased capital, but a pretty good double. Let's look at Google, because I think they are the ones that had the massive beat here. If you can see right here, EPS came in at 5.11, beating 2.62. That is an insane beat. So let me add the reports tab into a new column, see if it's updated. Yeah, that is a 92% beat. Look at that. That
Wow.
EPS bar right there is insane. And revenue looks like the highest revenue. Nope, just a little bit lower than last quarter's revenue, but still a year-over-year change beat. Last quarter was Q4, so that kind of makes sense. Let's see if this is behaving now. Yeah, Meta is coming down about 7%, right around the expected low. Let us know what you guys are seeing out there in the chat. But yeah, Meta not looking good. Microsoft seems to be relatively flat. Google up a bit. Amazon relatively flat. So it looks like the big thing here is Meta. We're not getting insane moves to either direction. Let's check out just the SPY and the QQQ maybe. Yeah, they're not doing too bad. Definitely a lot of volatility, of course. If you see Amazon, here's Amazon. Amazon came in at 2.78 EPS, beating the $1.66 estimate. And then the sales came in at 181 billion, beating $177 billion estimate as well. Let me get this after hours change percent going. Yeah, crazy stuff. Crazy stuff. Let me do this. What else do we got? I know we have a ton of names reporting earnings still. eBay. Let's take a look at eBay. It's like eBay.
Not too bad.
Beat. Yeah. $1.66 beating $1.58 EPS. Sales beat by about $0.06 billion. Yeah, someone said MU is dropping. Let us know in the chat what you guys are seeing. Yeah, MU's doing fine for the most
Not too
part.
bad. By the dip.
Yeah. You an MU bull?
I am.
Oh yeah, it's hard not to be. All these memory names.
I bought into DRAM ETF.
Yeah, this one has gone straight up since inception. Somebody's asking what happened to Meta. Yeah, good question. Let's take a look and see if there's any other news here. Looks like Meta Platforms reaffirms total expenses 162 to 169 billion dollars for 2026.
It's that CapEx that's got them doing it right now. I believe.
Yeah, it has to be. It's basically, yeah, Meta, higher CapEx than anticipated. Also additional data center costs. So again, like Rock was saying before this even came out, CapEx is huge to watch. But again, they did have a double beat. So numbers look good. It's just, this forward spending is questionable to investors still. So that is what's going on there with Meta. By the way, if you guys want to check out this platform, TrendSpider is what we are using. You can sign up, get a trial of the platform. Today, you just go to TrendSpider.com. You can try it out for just $19 at the lowest end and save up to 20% off. Again, it is cheaper than TradingView. TradingView is currently $69 a month. We are $65 a month when you pay annually, I believe. So really, and you can get a trial of the platform for very cheap. So definitely take a look. But yeah.
Yeah, it's such an all-in-one platform. I know, I love it.
Yeah, no, it's
again
incredible.
with the options data now. It's fantastic.
Yep. Yeah, full options data as well.
You can do the options contracts right on the chart. Also, you can chart those. Again, I have the overlay. You can drop that in on the actual chart itself. I have another one that does the opposite. So if you're looking at an option chart, you can drop the actual ticker overlay on the chart and see what's going on there.
Yep, absolutely. And you got Rock Regan over here creating a ton of custom indicators, one being this after hours change percent. Let's see. Yeah, definitely keep up the great work. But let's see. We got something from Microsoft here. Microsoft AI explodes 123% to $37 billion annual run rate as Dell bets big on the cloud, AI infrastructure, and agentic computing to empower every business. Is it possible to see an analysis of NVIDIA? We'll take a look at NVIDIA, sure, in just a second. Let me flick through some other of these earnings real quick, though, because we got tons to cover. QCOM. Let's see what the news here on QCOM might be. QCOM, EPS beat and a sales beat. Just by a bit. Nothing crazy, but definitely a double beat. And here's the forward guidance. Ooh, looks like Qualcomm forward guidance on EPS came in lower than expected. Same with sales. So not very good forward guidance there on QCOM. Not exactly what you want to see, unfortunately. And if you guys are enjoying this live breakdown, make sure you guys subscribe to the channel and like, because we're going to be going live Monday through Thursday for the next few weeks as all these earnings come out and for the foreseeable future, really. What else do we got here? We got Chipotle, I believe, reported. Maybe not yet. Yeah, not seeing any numbers, at least on our news feed yet. KLAC, very liquid stock here, but we do have the numbers. KLAC had an EPS beat and a sales beat. Double beat on KLAC. Adjusted EPS, it looks like this is the forward guidance. Came mostly in line, it seems like. And sales guidance also came mostly in line. Yes, someone asked if you can vibe code your own indicators. You can using Sidekick. You can just explain. We actually just released that today. Go check the most recent video on this YouTube channel to see how you can vibe code your own indicators on TrendSpider. Yeah, I think charts are a little bit slow right now, actually, you guys. Some of you guys have alerted that. I did just tag our main developer. Probably all of the earnings maybe causing that. I'm not sure, but yeah, I am noticing that too a little bit. Let's see.
The cloud providers need more compute.
Yeah, for real. VKTX. Take a look at this one. VKTX, which is a therapeutics company. It looks like they missed on EPS. Their EPS, they don't even have revenue, but they missed pretty bad on EPS, it looks like. Oh, yeah, Google up. Google is, Google, they just raised their quarterly dividend by 5% to 22 cents a share for Google. That is crazy. Let's see. Alphabet Q1 Google Services revenue plus 16%, and Google Cloud revenues plus 63%. So Google is absolutely killing it. EPS grew by like it essentially doubled what analysts were expecting. Can't get much better on Google, you guys. Absolutely insane. And by the way, if you guys want to check out all of Rock Regan's indicators, I will drop the link again to his page. He has tons on there. Somebody asked about good. Somebody asked about the sector rotation chart, or what do you call it? The market rotation indicator. It's called in the indicator, it's called sector rotation chart. This is TrendSpider, you guys. Again, this is TrendSpider. You can go to trendspider.com, or you can just use the link. I'm going to drop it down below in the chat. You can try the platform for as low as $19. Somebody said SPY is falling. Yeah, SPY is taking a little bit of a dump there, down 0.4% in the after hours session. But for all of you curious, this is the TrendSpider platform, arguably the best trading platform on the market. And you can try it for as low as $19 for the standard plan. I recommend the premium plan. It's pretty good for most people, and you can save 28% off of it. So check it out. Yeah, you can get tons of free indicators. You know, Rock Regan, I don't think you have any paid indicators.
Yeah, no, all my indicators are free. I think I have like 18 of them in there.
Nice. Yeah,
a lot of them are just kind of utility ones. You know, I like to have information on my charts.
Yep. No, that's great. Yeah, so tons of great. Yeah, you have some of the best overlay indicators. I mean, this after hours change percent. I can't wait for those options ones to come out. Military coup in Iran.
I know you've done a lot on the ORB. I've got a levels one that does an ORB in there. It plots different levels: pre-market high, pre-market low, yesterday high, yesterday low. So it puts all the levels right on the chart automatically.
Yeah. Do you have your own orb one, or are you talking about ours?
It's mine. It's an ultimate levels is the indicator.
Interesting. Let's take a look. Ultimate levels.
Yep.
Ultimate key levels.
That's it.
Yep. Ooh, this one looks pretty interesting. Let me hide this one real quick. Let's take a look. This is the meta chart, by the way, down 6%. So how do you use this? Let's see.
So it's showing the ORB right there. The default is 30 minutes, but you can change it.
Got it. So if you wanted, yeah, we can just leave it at 30. That's fine. Let's go to the 30-minute chart. Interesting. So the ORB, wow, look at that 30-minute chart. Absolutely getting crushed here on Meta. But
and then it's showing pre-market high, pre-market low, and then the dotted ones are yesterday high, yesterday low.
Okay. And this is the high of day. So which one's the orb lines?
The orb is the shaded. The shading there is the ORB.
This one?
Yep, the box, yep.
Yep. Okay, cool. Nice. Very cool. Very cool. So yeah, check that one out. That's all in Rock Regan's link down below. Ultimate level or ultimate key levels is the name. Very, very nice. Yeah, a lot of ORB traders. I know you day trade quite a bit too, right, Rock Regan?
I do.
Yeah. Nice. Let's see. You pull up. Yeah, QCOM is down. What else we got? Any big moves? Nothing insanely. Oh, VIAV. I think I'm in this one. So, oh yes, up 11.36%. VIAV. This one has just been trending beautifully. I mean, I'm a pretty simple trader. I mean, I just have my momentum stuff here, and I like to use like the MA cloud. This one's just been riding this MA cloud up on the daily all the way. So I love to see that. VIAV, absolutely. Let's take a look at the numbers. I'm actually not seeing numbers on our widget yet. Earnings scheduled for, yeah, of course, earnings scheduled, but I don't see them. Let me see if I can find them on somewhere else. Normally you get them by now. They must be out. I mean, this thing's up 10%. Absolutely crushing it. Let me see. VIAV. Vici reported too. Yeah, I'm not seeing numbers for VIAV at all. Should have been out 4 minutes ago. Not seeing on any sources. Vici reported. I think this is like a big REIT, if I'm not mistaken. Vici Properties. Doesn't seem like it's doing a hell of a lot. But yeah, let's see. Vici props core 1 0.61 misses the 0.66 estimate, and then revenue beat. So we got a half beat on Vici, not moving a hell of a lot though. You know, it's just a real estate stock, so these don't tend to move a whole lot either way. What else? Carvana. What did Carvana do? Wow, Carvana's up 9% on a double beat. Got a nice $1.69 EPS, beating the $1.50 estimate, and also a sales beat too. So Carvana continues to crush it, I guess. Kind of an interesting name here. And one of the craziest reversals that I think the market has ever seen.
Qualcomm making a little comeback here.
Nice. Let's see. Yeah. Wow. From red to green, or from red to flat, really, I should say. Look at that one. Look at that. Do you ever trade like these after hours, or is that too crazy for you?
No, so I paper handed a trade yesterday.
Hell yeah.
I was in some options on IWM, and I bailed a little bit early, and the thing spiked in the after hours. When the BE earnings came out, the IWM absolutely spiked. So my contract went from 18 cents to 40 cents. And unfortunately, I got out at 16 cents. So I took a little bit of a haircut and didn't stick it out. I paper handed it, and it spiked in the after hours, like literally about 4:04.
Yep, I remember. Yeah, it was a big move. Was a big move. BE has been crushing it. They reported yesterday, like we said. I mean, look at that monthly chart. Hard to, yeah, that's a crazy one for sure. Bloom Energy recently partnered with Oracle to help with their data center powering their Oracle's data center. So that's why that one's been so crazy. Let's take a look at Intel, just because this one has been flying today.
Bloom had a pretty good weekly bottom catcher signal.
Oh, did it? Let's take a look. Where'd my bottom catcher go? Oh yeah, down at 119. Yeah, it's beautiful. I mean, honestly, like if you waiting, obviously if you missed this, you could have waited and you saw this bottom catcher fire, got you in here, took a little bit of drawdown, but depending on your stop, if you held, you would be sitting 141% green at the moment. It's nice. Very, very nice. Yeah, what's Ford doing? Ford had an interesting move. What is going on up here? Some crazy line. It's up a little bit. It's like up 3%. Pretty good for Ford. Ford came in and wow, they had a massive EPS beat on Ford. 66 cents, beating a 19-cent estimate, and sales beat by about $1 billion. Wow, good for Ford. They have not gone anywhere for a while, though, to be fair. eBay. Sprouts reported. This is like a food market. They reported a EPS beat and a sales beat. And just about on par with Ford guidance on EPS. And they increased their fiscal year 2026 EPS guidance and sales guidance. So pretty good there on SFM. Wow, this one has taken quite a haircut, though. Wow. Back in 2024, this thing was ripping and rallying and gave it all back. And let us know if you guys are seeing anything else crazy out there. But I think we covered most of the big earnings, you guys. You can just take a look at see what the overall market is doing here on QQQ. Down a little bit in the after hours, but mostly regaining some of its losses. Somebody asked, if we run out of Sidekick messages, can you use another AI to code? Yeah, you can use any AI to code, but also you can use this in the custom indicator editor. You can click this, generate a new code using AI right here. And this is completely free to use for like changes and just create entire indicators already.
That's really great for simple indicators. Yeah. Like if you wanted to do an 821 cloud, type that in there, EMA cloud, it'll put it right on there.
Yep. 100%. It's great for small fixes and basic indicators and even more advanced stuff. I forget, I'm not sure which model it uses, to be honest, but it's completely free to use. So have at it for sure.
Yeah, I use a combination of Sidekick and this indicator, and then I use outside. I use a lot of Claude.
Claude is great. Yeah, it's been a little funky lately, but overall, it's still my favorite. Let's take your advice here. Let's make an 821 EMA cloud indicator and see what happens. Boom. See, just like that, custom indicator is built. It's pretty cool, actually. Yeah, that's a good one. Don't want to save that because we already have that. But
yeah, no, when I show people, that's the example I always use. So
that's a good one. That's honestly a great example to use. Somebody asked about Amazon. Yeah, I believe they did release and pretty flat. Let's double check what their earnings were. Yeah, they came in and beat EPS by quite a bit. 2.78 beating $1.66. Sales at 181 beating 177 billion, of course. And higher forward guidance for sales in Q2. What is going on, CJ? Good to see you out there. CJ is also an EMA cloud trader. I think he's going to be on a live pretty soon as well. So stay tuned for him. Let's see what else we got here. Amazon cites AI investment as reason for free cash flow decrease. That's been the story for a lot of different days. Yeah, someone made a golden cross indicator. Very nice. I mean, it's insane, you guys. The ability to code custom indicators with AI is so awesome. Like, I don't know how to code, honestly, whatsoever. I mean, I kind of know how to code just because I've been, vibe coding now for a while. But, like, yeah, check it out. Like, fire up Claude, fire up Sidekick, and whatever you want, whatever you trade, just explain it, and it will likely build it pretty good for you. Somebody's asking if they could build something with the market rotation leaders, for instance, XLK and XLY, to notify me if a orb is happening for one of the individual names. Yeah, actually you can. You can use, we have some built-in orb scanners. Orb, let's see, which one is it? Do orb trading strategy long. So what you could do, you use this orb trading strategy long scanner. You set it to the right time frame. You can change it right there to like whatever time frame, 10, 15, 60 or whatever. And then you just search for it through XLK. And so you can scan in real time for breakouts from any specific ETF for sure. Because we have the holdings of every ETF preloaded in. It's not going to work right now because the market's closed, of course, but yeah, you absolutely can do that. You just got to change what it's searching through to the specific ETF.
That's one of the things I really love about the scanner is you can build a scanner and then change your watch list and just go through all of them, some of them, big ones, like I said, a lot of times on bottom catcher, I'll look at the whole NASDAQ composite and see what hits, 3,000 tickers.
Yeah, no, 100%. It's really awesome. I think the way to get alerts from it, you would probably want to set the alert on the orb indicator itself. But you can do a scheduled scan, which honestly, I don't think a scheduled scan would be great for this because it would come pre-market. It doesn't do during the market, I don't believe. Yeah. So you can't use a scheduled scan, but you can use the strategy to do it because there's an orb strategy. You would have to set the alert manually, though. That's the only downside. You would have to set the alert manually. So your best bet would 100% just be to run the scan because it's intraday and it's real time. That's going to be the best use case for you, it sounds like.
Yeah, one of the things that I do is some of my key scanners, I keep them on my my columns, and I just run them during the day all the time. If it tickers above VWAP or I use certain EMAs and I want to know where they are, I'll run that scan during the day.
Yeah, exactly. You can what Rock is saying, you can add a scanner as a watch list right there on your chart. Of course, nothing's going to pop up, but as you can see, you can duplicate them out to be able to scan, all the different ETFs at once and name them as such. Like you go to Orb and you go here and you would basically do this. You would clone this. Hold on. Oh, that's interesting. It's not letting you create your own copy. That's kind of annoying. But yeah, you would basically just change the list here. And I guess I'm not sure why it's not letting you create your own copy. However, you could just rebuild this. It's one parameter right here. And then you can have a specific one for each different, the NASDAQ. You can have one for the XLY. And then you can, once you have them duplicated out on your sidebar, you can just have multiple over here so you can get the orb alerts or scan results, I should say, in real time. Let's see. Somebody asked about pre-market for, wow, okay, QCOM. 13% up on QCOM.
Wow.
That is, wow. I'm seeing a lot of news from their CEO or somebody saying Qualcomm Q2 highlights double beat. CEO says AI opportunity is reshaping our roadmap. Data center details coming. And by the way, laugh and cry. For like more direct support, definitely you can hit up our support team anytime. They can walk you through all that stuff for your specific use cases. Question for you, Rock. What's your favorite time frame for the bottom catcher?
I like the higher time frames. I like really the weekly is the one I like. And the monthly I kind of do during the month because it'll actually give a signal as it's happening, but it's not valid until it closes. So I kind of like to keep an eye on what's signaling. So the monthlies are, it's a very clean indicator in terms of it doesn't over signal. So I like that higher time frame. But I've used it even on 5-minute time frame. During the day when I'm in options, if I see a bottom catcher signal on a reversal, that's kind of a good move to jump in or add more. Or I'm it's kind of an option scalper.
Nice. Yeah, that makes sense. So, it works. It's valid on any time frame, technically, So, yeah. Whatever you're looking to do, of course, if you're day trading, you can use those lower ones, and swing trading and long-term investing, you just increase them. It all just depends. But yeah, for sure. Yeah, we got a 5-minute one here on QCOM. Fired it in an aftermarket session.
Oh, yeah, that's what it was, an aftermarket. Yep.
And QCOM is just absolutely flying up 13%. Let me check out VIAV. Love to see that up 14%. Wow. Oh my God. Carvana. So it looks like VIAV, QCOM, Carvana are the top leaders so far. Teladoc, not very surprising, is down. KLAC down. Meta is down. Amazon basically flat. Google is up about 3%. Not bad. What's Microsoft doing? Microsoft is down just a tad. But yeah, some big moves, you guys. see what the QQQ is hanging in there. QQQ is essentially flat now, so
Had some good signals there. Bottom catcher.
Was there? Let's see. Oh yeah, 2 of them on this candle here, around that 659 level for the entry as on the 5-minute. Any on the 1? So yeah, 659. It seemed to like that price today. Say SoFi? SoFi didn't report today, did they? Oh, they might have reported pre-market, huh? Yeah, SoFi. Yeah, that's right. Let's see how SoFi did. Looks like EPS inline and a sales beat. So yeah, not terrible there. Reports add this to the left. Kind of slow, but let's see. I think I saw some forward guidance here on SoFi. EPS expectations are in line, and pretty much revenue is in line as well. So nothing too crazy on SoFi, and they were down pretty good today. Oof, yeah, SoFi looking ugly, and so is Hood. SoFi and Hood, those 2 companies not looking great today on earnings. Yeah, QCOM is absolutely ripping. So is VIAV. I am absolutely loving it. You know, Rock, I don't even open my broker anymore these days. I just look on my phone because I use Signal Stack to pretty much do all my trading. I don't know if you've used it, but it is free to use Signal Stack, by the way.
I haven't used it. That's kind of my next thing. I was talking to a few other friends, and we were talking about that, trying to automate some of my indicators with Signal Stack.
Yeah, I think how I do is I use alerts.
Yep.
You can use strategies as well, though, but it really just depends on how you like to trade. Like I just use a trailing stop, so I just set an alert the trailing stop, and when it hits it, it just takes me out of the position. That one does cost money, like when you use an alert. But if you're just using like the trading panel, like I'll show you, I think on mine, just to like buy or sell, it's actually free, which a lot of people don't know. You use the trading panel here. You can type your quantity, and if I tap this right now, it'll literally go through my broker, like, and it's literally instant. Like there's honestly no delay that I've noticed. So I absolutely, honestly love that. Yeah. Test it out. I mean, it's completely free to connect to your broker and use the trading widget. So test it out. But for me, I have noticed no lag whatsoever. I'm not a day trader either, so I don't really care that much, but it's very nice. But it is really nice to set alerts on stuff and then have the alerts automate your trading a little bit. Yeah, Google's looking good, still at 5%. Google absolutely killed it. Tons of news coming out. Looks like Waymo has surpassed 500,000 fully autonomous rides per week. That is wild. Wow.
Go
ahead.
What's Tesla doing? Tesla's flat after hour. Just was looking on Waymo news, you know.
Yeah, no, for sure. For sure. Honestly, I'm surprised Tesla doesn't move more on Waymo news. I mean, Tesla's not doing good right now as is, but doesn't seem super sensitive to Waymo from what I've noticed. I don't know why. Laugh and cry. I'm mostly like a swing trader, position trader. I hold my stuff for a while, or at least, you know, unless I get stopped out, which usually happens quick, or I hold it for a long time is usually how it goes. Yeah, guys, if you guys have any other questions for Rock Regan about his indicators or about the platform or anything, definitely let us know. Man, I've been live for almost 3 hours. So, yeah, it's been a long day. Someone said CMG pushing. Oh, yeah, CMG. Bottom catchers came in on a 5 right before the close. That's interesting. And, yeah, it was a great one. CMG looking nice. How did they do? Looks like EPS inline and a sales beat. Good for them. Good for them. Someone's asking for your thoughts on Google, Rock Regan, if you have any. Oh, you're muted, by the way.
Sorry about that.
All good.
I mean, I'm kind of bullish on all the big hyperscalers, to be honest with you. So I'm, you're talking about multiple accounts. I have 3 accounts. One of them is a long term, and they're in my long term with many of the other mags and some other great names that I picked up early, NVIDIA, and I wish I'd bought more Intel.
I know. Intel just came out of nowhere. Look at that chart. No one, who would have guessed Intel? Absolutely insane. Actually had a nice little dump after the market closed, and then they retraced it. Somebody asked if I use the 20 EMA. I like to use like the 921 EMA, and then I have my own custom momentum indicator that I use. Kind of use break above pivot levels on top of that. But somebody asked, does Rock have a time frame on the release of those option chart overlays? I think you submitted it today, right?
Yeah. So no. So the two, I've got the overlays that plot the actual chart option contract. That's in the store. I've got the one that plots the actual ticker overlay. That's in the store. But the option grid that just got submitted, so that's being reviewed by the team.
Yep.
So I'm sure they generally take a couple of days, and then they'll approve it, and it goes to the store. So that one I'm expecting any day now. And then the latter, the dealer flow, I call it dealer flow intelligence. That one probably got another week of work on it just to make sure it does what I think it should be doing.
Nice. Yeah. I just checked on the chat for that one you submitted. It looks like it's probably going to be shipped pretty soon. So yeah, be on the lookout. I'll drop the link again to Rock Regan's store page so you guys can see all of his indicators again. Let me find it. There you go. Here's the link to Rock Regan's indicators. And somebody asked if you have a dashboard with several watch lists next to each other. Yeah, I mean, you can have a ton of watch lists next to each other. Like, I think just keep adding them.
I think you could do 3 or 4 columns.
Yeah, I mean, there's 6. Yeah, 3 and 3. So
3 and 3, yeah. So I do that. I actually usually have 5 up in mine.
Yeah. Yep, and they can be scanners as well. Watch list scanners.
I actually have 1 watch list, and the rest are scanners. So
yeah, I feel that. Yeah, I basically have scanners, and I build watch lists based on the scanners. So kind of similar here as well. Makes sense.
And then with the scanners, you can have different things in the scan that you can turn on and off. Mm-hmm. So like I have 1 scan that looks at pre-market levels, and of course that doesn't work in pre-market. Right. Above pre-market high, pre-market low. And so I turn that on once the market opens, and I want to know what tickers are above pre-market high. And then I'll look at, then I'll layer in like VWAP, and then I have some EMAs. I use actually a funny EMA, the EMA 113 on the 1 minute, nice. Which is a kind of a strange one, but it works.
Yep. Yeah, super customizable. Very customizable. You can even do an entire dashboard. I don't know if you've messed with these at all, Rock, but the dashboards are kind of slept on, honestly. Like, I have this one set up for the lives. It's you can set up, tons of different scans and charts next to each other like this. Bubble charts. You can set up your news feeds, different time frames. You get earnings, insider trade data, anything from what's happening now. You can stick in here, and you can just literally customize it however you want. Tile maps. I mean, all the stuff that we have, you can create a custom dashboard. So just be careful of, I remember on mine, I had a ton of scans, and sometimes it'll rate limit you if you open the dash and it scans all of them at one time. But other than that, I mean, you can stick pretty much as much as you want in here, like as many as watch lists and scanners as you want, way more than 6. So
I have 14 on mine.
Nice. Yeah. No, I figured you probably have a great setup. Mind if we take a look?
Sure. I'm not sure if it's pretty big, but yeah. Let's see. Let me share this screen.
Yeah. All good.
Let me stop on that one, and I will reshare. It's pretty, definitely pretty cool.
Yeah. Yeah. If you spend the time to customize it a little bit, it does take some time, but yeah, it's well worth it.
Yeah, just give me a sec. Okay, I'm not seeing the screen to share.
On StreamYard or?
Yeah, I'm looking in there, sharing.
Should be at the bottom.
I see it, but it's not giving me an option to share the tab I want to share.
There should be a way to do
Oh,
entire.
here we go. Got it. Sorry about that. Let me make this a little smaller now.
Oh, wow. Yeah, so here's another way you can set up a dashboard, you guys. That is a lot of watch lists, got a few charts, looks like some scanners.
So I like to look in the morning. I like to look and take a quick look and see what's hot and what's not. So I'll look at, miners, HPC, semis, tech, cyber, fintech, banks, oil, so on and down the line. And then I kind of get a real eyeball view of what's green and what's not in the morning. Nice. And up here, I have some 30-minute section. I usually have like NQ and ES up here.
Very cool.
And then I have a scanner here. There's that 113 VWAP scan that I like to use. And I have it down here also. So that's just my little scan.
Love it. Absolutely love it.
I'm going to stop.
Yeah, I took you off there. Let's see. You got a few questions. Somebody asking what the tool name is. It is TrendSpider. Once again, you guys can try out the platform for as low as $19. I'll drop the link down below in the YouTube chat. But if you're on X, just go to TrendSpider.com. I'll show you guys one more time here. The plans, you can start for as low as $19, as I said. And we're running a little sale. You can save up to 28% off. Again, when you pay annually, it's $65 a month for premium. As low as, it looks like $52 a month right now for standard as well, which is very on par with TradingView and other platforms. I believe TradingView is $69 per month when you pay monthly. So yeah, I'm sure Laugh and Cry. Yeah, that is definitely probably a custom scan.
Very simple to make though. I mean, really, really easy to make.
Mm-hmm.
And in fact, you can do it in the tool and just ask it to
true.
So that's the price closes above 113 and price closes above VWAP.
Yeah, like you can open the market scanner, type price closed greater than VWAP, and it will just build it for you. You can customize it. We're not going to be streaming earnings calls, unfortunately. You got some copyrights from that in the past, but somebody asked if you can set alerts that would cover a whole watch list. You can use Sidekick to create alerts on a watch list, yes, but it doesn't use custom indicators. You can just ask Sidekick to build the alerts for you and give it your watch list. So you can do that. But honestly, I think the scanner is probably better for a lot of people. You can run it on a schedule and get the scan results sent to your email before or after the market closes. Scanner is a little bit more customizable than just setting up individual alerts. So it just depends on what you guys are doing. But I do recommend if you guys sign up, you do get a session with our customer support. You can do a one-on-one call with them, and whatever you need to set up, these guys can help you out very easily. They know the platform very well. So hit them up, set up a call. And yeah, we highly recommend that because, it is a little bit, there's definitely a learning curve to learning these tools, this software. Can be very complex, but booking a call with them it will accelerate that very quickly.
Yeah, I've hit them up plenty of times.
Yeah.
When I get stuck on something.
Exactly. Yeah. So they are always around. I still hit them up too, even all the time. So yeah, you guys, if there's any more questions, let us know. I'll probably cut the live here pretty soon, but because a lot of earnings calls are going to be starting. If you guys want to listen to the earnings calls, I urge you guys to just look up the symbol plus investor relations and go to their page and just listen via that way. We'll not stream them here. But yeah, I think we covered everything that people were asking. Another thing you guys can do if you're not ready to sign up, you can at least get the free market newsletter. We send it every single Sunday. It's completely free. You can sign up using the first link down below in the YouTube chat. Send you guys a complete update of what happened in the market every single week for free. So check that out. Also, make sure to subscribe and like the video and tune back in tomorrow at the same time because SanDisk reports earnings along with a ton of other companies. But I think we're probably going to call it there, you guys. Rock, is there anything else that you want to say before we head off?
No, just always fun to join and, great day. Actually, take one quick last look at the earnings, guys.
Yep. Let's see. Looks like VIAV, QCOM, and Google, all the winners. Chipotle's up, Carvana's up, Cheesecake Factory is up, Sprouts, and the losers, Meta, KLAC, Teladoc, Microsoft, unfortunately, is down a couple percent. Amazon is pretty flat. So, yeah, there's a quick review. Yeah, you guys, that's going to do it for us. Rock, we'll definitely have you on again in the future. Always a pleasure having you on. Hopefully I'm sure next time you'll have tons more indicators for us too. So you guys make sure you subscribe and tune back in for that. Other than that, you guys have a great rest of your day. Rock, thank you so much again for coming on.
Thanks, Mike.
All right. See you guys.